All right, folks, welcome to the video. Anthony Special here with Hawkeye Traders. Hope everyone's having a wonderful day. Want to talk about a real live setup identified as the market was ticking live this morning. Want to dial in specifically on this high, okay? We're going to talk about how we identified that in real time. So crude oil here, we're looking at light sweet crude. This is a 3-minute chart, meaning each candle represents 3 minutes of price action, all right? We identified the high live today in front of folks who were trading live accounts. Want to talk about how we did it. So, you know, as some of you know who've watched my videos before, I'm a big fan of just drawing a simplistic trend line, right? Just kind of getting a 3 or 4 touches, if at all possible, looking for a reason to believe price action may do something, okay? And then I want to certainly dial in a little closer as this high was formed. Now, I want you to look at the 842 candle very specifically, all right? That's this little doji style candle right there, and that shows you that, hey, Mr. and Mrs. Trader, we should be aware that as we pushed higher, we had a strong increase in selling volume. So this candle becomes meaningful to me, right? I need to now keep an eye on it, and if I cannot get buyers to close above it, I would be very concerned that perhaps crude has ran its course. Now, not necessarily, but I need to now, be well aware of this candle. So a little time goes by, you see a little buying, a little selling, a little more selling, a little more buying, a little bit of indecision, and then we get this 9 a.m. candle right here. Well, what do we have at the 9 a.m. candle? Well, we have an increased amount of selling volume, okay? Now, we don't necessarily break the trend line. We are unsuccessful, obviously, in pushing higher. We fall into a little bit of indecision here, and then what happens? Well, strong selling here, market unsuccessful in going higher. So I identified this live in front of traders who were trading live accounts, and I just want you to see that very specifically the balance of the day had sold off from that high. Now, I personally took this trade. So I'm very well aware of the risk that was associated, right? If I was wrong, if I pushed above that prior high and closed above it, I needed to exit my trade because my thesis, my analysis was proven incorrect, right? But I was right and provided a good handful of levels here that very specifically price could push towards. As low as 82, what is that, 73, 82, 74, 72, sorry, 82, 72. I had told him that, listen, if price continues lower, 82.75 was a realistic goal. Well, I was wrong, okay? We went to 82.72. I missed it by 3 ticks. You know, you can only be so good at what you do, and unfortunately, I was off a little bit today, but I was spot on calling this high based around what? The way the price action was acting and the presence of heavy sellers. Now, I'm going to take this to the next level, right? I'm going to take this to multiple entry time frame confirmation. Many of you are going to go, oh my God, what is that? Well, you see, I look at the market from a couple different angles. Why? Because I want the highest probability of success. I'm trading my own hard-earned money, and I'm not trading a small amount of it. So, with that being said, when I enter a heavily leveraged position, I am in it to stack as many odds in my favor as humanly possible. So, we're looking at a 3-minute chart. I'm going to now go to a 5-minute chart, okay? And I want you to look very, very carefully. What do I have on the 5-minute chart? I have strong buying, right? Because the 5-minute candle represents a different amount of time. And at the 9 a.m. candle, I also have strong buying. But what's happening? The buyers are being absorbed, right? On the smaller time frame, there's a greater presence of sellers, Whether you want to call this, I call this a volume exhaustion, right? This is a volume climax. The buyers gave it all they had inside that 5-minute window, and then they rolled back over. So I saw two reasons to get short. Reason number one, on the 3-minute chart, high presence of sellers. Reason number two, on the 5-minute chart, ultra high presence of buyers. So it was telling me, calculating two of those time frames, going, hey, we have, what do we have here? We have a volume climax of buyers with failure to follow through. And when I dial it down to the 3-minute, I now am able to more clearly see the actual selling transpiring. So this may confuse some of you, but don't look at it as confusion. Look at it as multiple time frame confluence. On the 3-minute, heavy presence of sellers. On the 5-minute, heavy presence of buyers. So I have a buying climax, right? And then I also have huge presence of sellers. Why do I look at two time frames? Because the 3 and the 5-minute are probably the most predictable, low time frames you can possibly work with when you are trading, okay? Intraday, at least. Some people like the 2-minute, some people like the 1-minute, whatever suits your fancy. I personally look at the 5-minute and I look at the 3-minute. Those two have proven through my career to be the most profitable for my approach to trading. All right? To me, I saw reasons here not to try to get long and reasons here to wait to see if there was an opportunity to get short. Right? I had buying volume climax on the 5-minute. I have high presence of sellers on the 3-minute. Something's cooking here, and I need to be ready and willing to partake in it. Well, we did, and these were the levels very specifically we looked towards. Okay, if we would push through 84.16, we were going to push towards 83.95, followed by 63.65, 63.45, 63.35. If we push through $83, we were looking specifically for 82.75. And as I said before, I was wrong, and I'll own it. The low of the session went beyond my 82.75 target to 82.73. I was off by 3 ticks. I will own it. I was wrong, and I'm totally fine with that. Okay? That's part of trading. You will be wrong, and you need to accept you're wrong. If I need to be wrong based on 3 ticks, I can live with that. All right? Either way, the 82.75 target got filled, and that's all that mattered to me, because the folks that were with me trading live money, they needed to know where the market was likely headed, and that is exactly what I provided. I provided saying, hey guys, based on the Hawkeye volume and price action, based on hard, extreme buying on the 5-minute, extreme selling on the 3-minute, something's cooking here. This is probably the top for at least the moment, right? Maybe the top for the session. And I told them, if we dial it back, we could dial it all the way back to 82.75 would probably be higher time frame support. Below that would be 82.40. We obviously stopped at 82.72, and again, I was off by 3 ticks. So I wanted to share this with you because I think it's super important to understand. But by looking at multiple time frames, by identifying what's happening here, you could have easily called the top on crude today, right? And I took this short position, and I'll be honest with you, okay? At 82.35 or 83.25, I'm sorry, I was out. Okay, I took my money. I was done. We tested the low of the session, 83.35. Sorry, I'm talking about all these numbers here. 83.35 was where I took the balance of my profit off, and I was done. And I was totally fine with that because it worked, right? It worked for me. But I told my traders who planned on potentially holding, we could be looking as low as 82.75, and we just pushed that. So, but the point of the matter is, guys, Hawkeye volume, understanding it, price action, understanding it. If you look at my screen and I remove all the drawings, what am I left with? Volume and price action, right? What do we provide you with the Hawkeye indicators? We give you the volume paint bar, we give you the wide bar, right? We give you the pivots, we give you the volume, we give you the volume radar dot, because you're going to need all these things so you yourself can identify when things like this are transpiring, and perhaps capitalize it if it aligns with your trade plan. So what I'd like you to do now is go below this video. I'm going to leave a link for a training webinar. Attend that training webinar. I'd like you to take some notes, okay? This is very important, guys. If you don't understand volume and price action, all the other stuff you have on your screen is absolutely meaningless, okay? I don't care if you're using relative strengths, stochastics, Bollinger Bands, whatever, right? Or some other form of software. If you don't understand volume and price action, nothing else matters, period. End of sentence, firm stop right there. So watch that training webinar, take notes, reach out if you have questions. Let's get the indicators populated up on your screen. TradeStation, TradingView, NinjaTrader, MetaTrader. I don't care which platform it is, our indicators will populate on all of them. More importantly than the indicators, I want to get you access to the Hawkeye Volume Mastery Series. Why? Because now that this is populating on your screen and you see it transpiring live, you need to understand how to interpret it, just like I did live this morning in front of traders trading live money in an actual trade that I took myself. I think it's very important, okay? So take that next step. You won't regret it, because until you understand this stuff, guys, the rest is just nonsense, okay? So I invite you to do so. I invite you to reach out to us with any questions you have, and let's get you on the ball rolling towards understanding volume and price action, so that you're not entering a trend as it's ending, or you're not missing out on opportunities of significant reversals like the one I shared with you today that I myself capitalized on. I appreciate you being here. God bless. I'll see you in the next video. And to your trading success is the reason we are here, to simply serve